Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Mike Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And of course, joining me today is Michael Becker.
Hey, Paul.
Today, in the podcast, we are with a team from Transwestern. Transwestern does a tremendous amount of business as brokers of apartments in the North Dallas, North Texas, Central Texas, from, say, Waco all the way north. They do a great job in the marketplace, and we want to kind of focus a little bit today on really two sections of what they do. One is the tertiary and the secondary markets of apartments. Why do people buy in secondary and tertiary markets? And we're going to talk a little bit about that. Second point we're going to probably talk a little bit about is how Transwestern has done for 2014, 2015, what their view is on 2016. So, Michael, I'm going to kind of kick it off to you a little bit, and let's get this podcast going.
Sure, yeah. So with us, we have Taylor Snooty, James Roberts, and Philip Wiegand. You want to say hi, guys?
How's it going?
Hey, guys. How's it going? Thanks for having us.
Maybe you guys could start off by telling us a little bit about your background. I don't know who wants to go first. Maybe kind of how long you guys been in the business and what you guys kind of focus on.
Yeah, so Taylor here. I grew up in Dallas and went to Lake Highlands, graduated from SMU. So I've basically lived inside the 635 loop my whole entire life. So know Dallas very, very well. My dad was an apartment broker in the 80s. So when I got to school, he gave me a list of 5 names and, one of them hit. So kind of fell into this job by chance, but been at Transwestern now for 10 years and doing it ever since.
My name is James. I've been with Transwestern for about 5 years. Grew up in the DFW Metroplex in McKinney. Graduated from Baylor in 2007. Got into mortgage banking right in the 2007, 2008 timeframe, right when the crash was happening, so not a great time. Hung out there for a couple years, then worked at PNC Bank and came over to Transwestern in 2011, first as the analyst and then transitioned into brokerage.
This is Philip Wiegand. I've been at Transwestern since 2007. Grew up in Dallas as well. Been inside the loop my whole life except for 4 years when I lived in Waco, going to Baylor University. So I work mainly the DFW market with Taylor, and then James works mainly tertiary markets in North Texas, Oklahoma, in those areas.
So you guys are 3 members of the DFW, or the North Texas multifamily team here. So what kind of volume did you guys do over the last couple of years, and what are you guys looking for 2016?
So for the last 2 years, we closed 15,000 units, which is about $700 million in volume, split pretty equally over the last 2 years on those numbers. So, I'd say in the B and C market is our focus. Larger assets, typically in that 200 to 600 unit range is what we're working on. It's harder to get those bigger deals in the secondary market, so probably in the 100, 300 unit range for the secondary markets. But I'd say we're one of the most active kind of BC players in the North Texas market.
Yeah, those numbers are absolutely unbelievable because if you divide the number of days by the number of units, that's like 22 or 25 units a day you guys sell. That is unbelievable. So you're probably the top producing office shop I would think, in the United States. I know you guys have won all kinds of awards because of that. And so I really trust you guys as being very knowledgeable and a depth of knowledge in the multifamily in the B and C space. I mean, there's probably nobody that does a greater volume than what you guys do. So, James, I'm going to kind of focus the questions a little bit on what is a secondary or tertiary market in your mind. I mean, we have Dallas, which I would imagine is the primary market. We have 7 million people in the Dallas Metroplex, Dallas and Fort Worth area. And a secondary market is, in your mind, what is a secondary market? Where's that located at?
Well, it's really anything that's non-primary. So it's going to be your Abilenes, your Tylers, your Longviews, your Amarillos. Generally speaking, smaller metros, smaller cities, you're going to have populations of anywhere from 30 to 150,000. And really, they're just diversified economies. Each one's a little bit different. But I define it generally as anything non-major.
non-major markets. So let's kind of talk a little bit about that, and let's give some examples. Would Tyler be a secondary market? Would Longview be a secondary market? Would Waco be a secondary market?
Yeah, absolutely. All of those would be secondary markets. I would say Tyler being one of the strongest East Texas markets, definitely Waco, Amarillo, Abilene, your Midlands and Odessas. And then when you start going more tertiary, it gets a little bit smaller. We're talking your Lufkins, Nacogdoches, Palestine, those types of markets.
Okay. So areas in my neck of the woods would be, areas maybe of 100,000 people in population or less.
Mm-hmm.
Okay. So why do apartment buyers go into the secondary or tertiary markets?
Well, generally speaking, they go there for better yield, I would say, and it's less competitive. So historically speaking, in DFW, if you were to go out and buy, a Class B asset and buy it on a 5.5 or 6.25 cap rate, if you go out into these smaller markets, you might get 50 to 100 basis point spread.
Wow. So the typical buyer of these secondary and tertiary markets, are they new buyers? Are they people that haven't owned properties in the past? Are they small family offices that just want some exposure to the secondary, tertiary markets?
It really is like DFW, I would say a mix. Out in these smaller markets, there tend to be the same players in each market. You see a lot of the same guys buying. But oftentimes we're finding a lot of first-time buyers are heading out there just because the pricing is a little bit different. And like I said, you can get a little bit more attractive return. But it really is a wide range of buyers in these markets.
So buyers that are typically secondary, tertiary markets will always be secondary, tertiary markets? Did you see them coming into the primary markets?
Oh, absolutely. Yeah. I mean, oftentimes we'll have buyers that are owned primarily in DFW and maybe they want to venture out into other markets and vice versa. So, you don't necessarily have to only own in secondary markets.
Sure.
We have people owning in primary and secondary.
But when you do own as like a secondary market or a tertiary market, because the market is so small, and when you buy say a 50 or 100 unit building, there may not be a lot of competition or inventory out there. So you can kind of control your own destiny, where some of these primary markets that you guys are in the Dallas-Fort Worth area, there may be lots of competition out there. So the secondary market affords the opportunity to kind of set your own course, be the new sheriff in town, that you can kind of set your own rents and set your own management companies and kind of set the pace of what you want to do in these smaller towns.
Yeah, absolutely. A lot of these markets, the inventory is very limited, so you have better control on the asset in the market. Absolutely.
Give me an idea of say a transaction that you guys are closing. We'll leave the names of the properties and names of the buyers off. I mean, give me an idea of kind of a typical transaction in the secondary or tertiary marketplace.
From a due diligence standpoint, or just timing-wise?
Timing-wise, why they decided to buy it, why they went forward to the transaction. Were they primary borrowers or primary buyers first and couldn't find anything and they decided to get into the secondary market?
Right, yeah. Well, we recently sold a 100-unit deal in Longview, Texas. We fully marketed the asset for an owner out of California, and it got a lot of attention. I will say, when you're going into these smaller markets, one thing you might run into is that someone might not necessarily want to come in and buy a 50-unit deal there and have that be their only presence in the market. So oftentimes what you'll find in the smaller markets, when you have a unit, or rather a property of 100 units or 50 units or so, oftentimes those will trade to people that have an existing presence in the market. So this particular asset, like I said, it was fully marketed. We found the buyer. He owned multiple complexes in Longview. And that for us as brokers obviously is great because we know they already have a comfort level with the market. And it really mirrors the DFW marketplace in terms of timing. I would say, market timing out there, we're looking for 30-day due diligence period and closings to occur 30 to 45 days after the expiration of the due diligence period. So from a timing perspective, I would say it's very similar to the DFW Metroplex.
In the transactions that you've closed with the lending sources, any problems with financing in the secondary, tertiary markets have you found?
Yeah, I mean, definitely in some of these smaller markets, you might not be able to find agency financing, or if you do, it might be a pre-review market, for instance. But oftentimes we'll find bank loans are being done, bridge loans are being done out there. And it really is more relationship oriented, I would say, in how you find your financing.
Let's give people kind of an idea when they do buy in the secondary, tertiary markets. Let's say they live in Dallas, or they live in Fort Worth, or they live in in some other place, not in the Dallas-Fort Worth, Texas area, but let's say they live in California or they live in New York and they want to buy something in Denison or they want to buy something in Waco, probably about 90 to 120 miles away from an airport. Let's kind of give them kind of a sense, is it kind of set it and forget it with a management company that they don't have to walk the property every week or two? Let's kind of talk a little bit about some fears people have when they buy into the secondary, tertiary markets.
Yeah, I would say the biggest objection that I have to overcome in selling these properties is, well, how am I going to manage the property? I'm out here in California. I don't know anything about Tyler, Texas. I'm buying this 200-unit complex. Now what? And, really that is a misconception because there are great management companies that serve these smaller markets. So you can absolutely find one that will manage it properly for you and allow you to hit your pro forma projections. But, I would say that you don't need to be at your property that often. I mean, I would say realistically, most of these people buying these properties out in these smaller markets may visit their property once every 6 months, some of them even once every year if they own multiple in the market. You do tend to rely more on your management companies out in these markets, but they're absolutely capable.
Let's talk a little bit about just in the secondary market and the tertiary markets, these areas that are 150 to 100 miles away from, say, major markets like Dallas and Fort Worth. In your mind, what does 2016 look like? Is that going to be another good year like you guys had in 2014 and 2015?
Yeah, I mean, from a secondary markets perspective, I absolutely think that 2016 is going to be a great year. I mean, it mirrors DFW to some degree, but I'm already finding, first quarter getting started here, that there's definitely a lot of product that will be coming on the market throughout the year. And there's still a lot of investor appetite out there. And I think as we see a lot of these maturities happen from loans that were made in 2006, 2007, there's going to be a lot of product out in these smaller markets.
Yeah, I definitely agree. And I would say that probably one of the things that people really want to focus on in the DFW area, if they can't find something in the 50 to 100 door range in the primary markets, you really want to look and talk with James about what's going on in the secondary, tertiary markets. I mean, I think it sometimes can be an overlooked market that people really need to focus in on that and build a relationship with James at Transwestern and his team of trying to put a transaction together in the secondary market. Let's kind of throw it over to Taylor Snowden and Philip. You walk into this office, and we're in the office of Transwestern in Dallas. You see all these awards up on the wall for you guys. I mean, you guys have just done a fantastic job of creating inventory out there with these sellers and these buyers doing 8,000 units a year. I mean, just unbelievable numbers. But 2014, 2015 were just great years. What are you guys looking at for 2016? Are you guys looking at another good year? And you guys just came from the National Multifamily Housing Council meeting down in Orlando, and you heard a lot of speakers, a lot of people you talked to down there. Are they positive about the markets, not only in Dallas, but in the United States?
Yeah, I mean, I would say that we're bringing out a bunch of deals right now. We probably have $160 million that we're coming to market with right now. So, we're just starting to put this stuff on the market. So maybe a little too early for us to tell buyer reaction, buyer response until we really start getting the offers in on these properties. But what everybody's saying and the response from our initial e-blast to the market is that there's no slow up. Rent growth is supposed to still be as strong as it was last year. The B and C space is seeing the strongest rent growth in the market right now. I'd say we focus on the North Texas market. So we are seeing a lot of benefit from the oil impact on Houston right now. Some guys diversifying from the Houston market. We sold a couple properties last year. It's definitely helped push our pricing. It's making our market look a lot more attractive to a lot of investors. So we're benefiting from the oil impact, I would say. Dallas is diversified enough to where we haven't seen an impact on our fundamentals here in the market.
So that was my question I was going to ask you, because last year in 2015 NMHC versus 2016 NMHC, 2015 was all about oil and the impact of it, and now it's gone down $50 or $60 a barrel from there. So you're not concerned at all about DFW's impact with oil or any sort of ripple effect throughout the state coffers and how that would impact us here in North Texas?
I would definitely say we're watching it, but we have not seen any impact thus far. We talked to our Houston team, and there's some concessions in the B and C space, definitely in the Class A market there. I think a lot of guys are watching that market very closely and want to jump in and seeing some opportunity down there, but we've yet to see an impact in the Dallas market, so we're optimistic that...
Oil jobs only make up about 3 to 5% of the workforce in Dallas anyway, so we have a very diversified economy up in Dallas. A lot of different sectors being represented. So, we're not really worried about how it impacts Dallas overall.
What concerns, if any, do you have about 2016 and beyond and DFW in our marketplace as it impacts the multifamily space?
Rents have gone up for a long time now. And how long is that sustainable? It feels like the amount of job relocations here and the job growth that we're seeing in this market, that it's sustainable for a long time. But if we don't see huge wage growth movement, then how much further can rents go? Most of the stuff we're working on, guys are coming in and really improving the interiors of this B and C stuff that still looks like 80s vintage and taking it to maybe like an A- quality finish out. So we're really seeing a lot of rent growth from guys putting money into the properties.
And the deals you are having come out now in 2016, are they different than the stuff you saw in 2014? Or there's a lot more deals that have kind of already gone through the renovation cycle and a little bit more for turnkey or a yield play versus the value play?
Yeah, absolutely. Probably half the stuff we work on is stuff that sold in 2012, 2013, even 2014. We're relisting some of that stuff now. So, the positive is those guys haven't owned it long enough to really push the rents as far as they can go. So I think there's still a lot of value enhancement in the rents on those properties. One thing is that we're working on a lot more loan assumptions because of that. A lot of guys locked in the long-term debt, and today everybody prefers free and clear assets because IO is so prevalent in the market today. So it's a little bit tougher to work on these loan assumption properties because you can't really leverage it all the way and you can't get the IO. But just a little bit.
How's that impacting pricing? Obviously, that's a boat I'm in. Being owned in the marketplace, we chose to take a lot of long-term fixed rate debt. So how does that impact versus an assumption that you can maybe supplemental all the way up to 75% versus a free and clear property? What kind of discount in pricing are you seeing, generally speaking, from a loan assumption versus free and clear?
It definitely depends on the rate. So we're working on several deals that are 4.5% and under on an assumption basis. Those aren't getting hit as hard. Some of the stuff in 2013 where the rate's locked in closer to 5 and north of 5, those are being impacted maybe 50 basis points on the cap rate or so. With IO, you walk into a deal on a double-digit cash on cash. So guys really want free and clear. I would say maybe 30% of the buyer pool drops off on an assumption basis, but there's so many buyers in the marketplace today that we don't have a hard time selling the assumption properties. It's a function of pricing.
So in this environment, it's all still pretty competitive out here. What gets your attention? What gets the seller's attention? So if I'm a buyer trying to go win a deal in a competitive situation, what's going to make me stand out from the next guy?
I would say on our free and clear properties on the market, maybe 70, 80% of them are going to get non-refundable earnest money at execution. So, most buyers come and say, well, if I'm going to do this, I want a discount on price. And I would say you're going to have to be the highest price with non-refundable earnest money. That's how competitive the market is today. So, on our deals we may get 15 offers, but really there's 3 guys that are fighting over it. So I don't necessarily, everybody thinks it's overly competitive and they can't win deals, and that's not necessarily the case. You're really competing with just a few guys at the end of the day. So, surety of close, I would say 95+% of our properties that we go under contract with close. We maybe only had 1 or 2 deals maybe fall out last year. So it's rare. We do a good job up front of vetting out the buyer and making sure we've got the right guy and that they've done enough due diligence up front. The more due diligence you can do up front and make us feel comfortable proving up your equity, getting us in touch with your lender up front. Each buyer, we typically get the seller on the phone with them and do an interview process. So they're involved in the selection. A lot of due diligence is done up front, so we don't get a false start.
So, Philip, you've walked a lot of units over the last several years, especially a lot of these 80s assets. What are some of the amenities that are kind of the most hot things today? All the 80s products had tennis courts and some of them racquetball courts and things like that. So what have some of the unique things that owners have done to, freshen up the amenities set of these B products?
On the 80s deals, the tennis courts are a big thing right now. They're converting them to picnic areas or sports courts or soccer courts and that kind of thing. And residents really like that. Another thing is just sprucing up the amenities that are there, adding nicer furniture to pool areas, adding grills to the pool areas, going with the playground and a dog park. Those are kind of the big things that people are adding if they don't have any amenities.
And as far as the bang for the buck on interiors, what's the biggest value creation you see when people come in and take a stale 80s asset and renovate it? What would you recommend someone do first and foremost?
Tier one is, faux wood floors is kind of, people have come to expect that as an upgrade. Black appliances, brushed nickel fixtures. If you want to take it to the next level, people are starting to do backsplashes in the kitchens, knobs on the cabinets, and new cabinet fronts altogether, kind of taking it to the next level. So there's kind of two different tiers, and then you can even put granite in. We have some guys putting granite in deals, depending on location. So
what sets Transwestern apart? We kind of talked a lot about all the volume you guys have done. So why would someone at the end of the day here choose you guys over the next guy at one of the other major brokerage shops in town?
I would say volume is key. I mean, we've got deals on the market, and you look around North Texas, and we've probably sold something around every property that we're underwriting right now. So we've got the experience there. We're all in our 30s here, so we're kind of the young guys in the game right now, out hustling and out working in real hard. So I would say that our pricing backs us up. I would say that we're out there getting the highest price for the assets that we're marketing. So that's what I would list with us.
Yeah, absolutely.
Philip, anything to add to that?
No, he said it pretty well.
So, the takeaway on the message coming out of you guys is that the market for 2016, you think is still going to be a very solid marketplace. We still have a ton of buyers in this marketplace. We still have a number of sellers. There's not a lot of opportunity for inventory, but you guys are unbelievable that you guys actually produce the inventory that a lot of broker shops do not have the ability to do. So I give you guys a lot of credit. Will you guys do transactions? I mean, James, you'll do transactions 25 doors and above? I mean, tell me a little bit of the threshold in the secondary, tertiary markets that you have.
Yeah, I mean, generally speaking, we like to keep it north of 75 units in those smaller markets. But I mean, if we have a relationship with a seller, for instance, and they own a 25-unit deal in a market, we'll list that and sell it. But most of the time in the small markets, it's 75 units and up. And as Taylor said, there are not a lot of 500-unit complexes in these smaller markets, so it tend to be, up to 300 units or so.
And you guys have inventory right now that's available for people to take a look at?
Yeah, absolutely. We just came to market with a 172-unit complex in Longview, Texas. We have a 72-unit student housing deal in Nacogdoches, Texas. Right now, we're negotiating a contract on a...
Let's just talk a little bit about that's the Soho House down in Nacogdoches?
Social House, yeah.
Social House. That was an interesting one because you sold that to the current sellers.
I did, yeah.
And they put in a ton of money in a college town.
They did, yeah.
Yeah, and they just did a wonderful job. Nice property, student housing deal. Mm-hmm. So smaller marketplaces, and they've done a great job of kind of rebranding the property, taking it from a kind of a market rate property to a student housing deal and kind of made it look like a place that everybody wanted to live at.
Yeah, that's really a great story. It was a group out of Austin that purchased it a couple years ago. And, when they were looking at the deal, it was like crime property. It had a negative reputation in the marketplace. And they took it over. They put approximately $10,000 a unit into the asset. And this ownership group, they were actually from the Nacogdoches area. So they knew that the students would come if they gave them the product. So they went in and completely renovated all the interiors. Even a few of them had granite, as Philip was talking about, backsplash, black appliances, completely rebranded it, did a lot of exterior work, and they actually converted it to an all bills paid leasing model just to make it easier on the students. And they've literally taken that property from 65% occupancy all the way up to now it hovers at 95, 100%. They're able to push rents month over month. And it's really become one of the top complexes in that marketplace. So the repositioning strategy, I think a lot of people might only equate that to Dallas, but you can absolutely have success, and there are definitely opportunities in these smaller markets to reposition assets.
Give me another example, not of a repositioned asset, but that you have available that's a stabilized property.
Right. Well, like I said, this 172 unit complex we have in Longview called Treehouse, it's a Fannie Mae loan assumption. It's consistently been over 90% occupancy for the last probably 24 months. It's a stable deal. And what I really like about this particular asset is while it is stable, there's opportunity to upgrade the interiors and push the rental rates. When you survey the competing properties in the market, it's evident that if you go in and do a light interior rehab, you should be able to push the rents. But for an investor that maybe doesn't want to go in on their first deal and do a 10,000 unit renovation, something like this might be perfect for them. You go in and put $3,000-4,000 a unit, and you should be able to get those pops in rent.
So I think the takeaway is that there are properties available to buy in the secondary, tertiary markets. And if you work with a group like Transwestern, that they can kind of guide and hold your hand and kind of tell the story, the background of what you probably could do for the property to bring maybe a valuation play to the transaction. So anything else that we didn't talk about today that you would think somebody would want to know about you guys and the market opportunities that you guys bring to the table?
No, I would just say reach out to us if you're a first-time buyer or looking to get into the Texas markets. Part of what we do is for new buyers is just kind of getting to know you, getting to know your requirements, educating you on the marketplace. So when it is time for you to buy a property, we can be a resource for you.
Building a relationship with these guys is a critical importance of winning a deal. They got to know a little bit more about you, just like what Taylor was saying before. Is they want to kind of figure out where your equity is coming from. Is that captured equity that you have control of? Have you already raised that money? Have you already talked with a loan officer? Have you already found out that this loan can be done on a property? And so, they want to convince their sellers that you're the right person to buy the property. And these transactions are, there's not a lot of inventory that's available because people are staying in these properties. But if you can prove up to them that you are a good buyer and that you have your act together and you've checked all the boxes on the list, that they want to work with you too. So anything more to add, Mike?
No, just maybe if you guys can let everyone know the best way to maybe reach out to you, if you have a website or best phone number to reach you guys that want to get in touch with you.
We can put the contact information on hopefully the podcast, but you can call us. It's our first name dot last name at transwestern.com. So Taylor Snowdy, James Roberts, and Philip Wiegand.
Let's go with a telephone number first.
972-774-2500.
One more time.
972-774-2500.
Boy, guys, I can't thank you enough for spending some time in the podcast. Hopefully everybody's learned a little bit more about the Transwestern story. And the number of units that you guys closed the last 2 years has just been a phenomenal success story for you guys. The awards on the walls absolutely are a testament for your hard work that you've done and the value that you create for all these sellers and buyers together. So we appreciate you guys spending some time with us. And thanks for spending some time.
Yeah, thanks, guys.
Thanks, guys.
Thank you for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitallending.com to sign up for our weekly email updates. We'll see you here next week with another great interview.